Yes, the Doji on Friday formed right at the bottom of a very bad week for the market. And stochastics weren't quite in the oversold area. So the Doji gave us that trading platform rule that's very simple. They're going to move the trend in the direction of how they open it after a Doji, which in this case told us if they opened up positive and went positive, they were supporting at a level it supported before. If they had opened negative and started down, we could have been in wave 3. As of right now, with stochastics now starting to curl back up because of the morning star signal formed today, it becomes another very simple trade. That if the markets open positive above the T-line tomorrow, we're going back up to test the top end of the channel again. This gives us probably a day or 2 or 3 of positive trading. And although the stochastics were not in the oversold area yet, we did have a left-right combo set up on Friday. Doji followed by a bullish engulfing signal. Very strong reversal signal. Now we have this channel that was broken out of to the downside. Have to see whether the NASDAQ can get it back up to test the bottom of it to see whether it's going to act as resistance versus support like it did on the way up. And knowing which direction the market was going to move with a fairly high probability makes trading the E-minis or the YMs extremely easy using candlestick signals. Once it broke up through the T-line, we had a nice trade until we saw the bearish Harami followed by a bearish engulfing signal trading back below the T-line. When it broke down below the T-line, had a nice trade until we had the inverted hammer and bullish confirmation back up above the T-line. And note how the T-line on the 5-minute chart maintained the integrity of this uptrend the whole day. That meant you could have had 3 E-mini trades during the day and made a huge amount of money. This is not an unusual situation. The jump start that most investors can get with candlestick analysis is knowing which direction to go on those first trades and which way the bias of the trend should be for the day. And another important element about knowing which direction a price or the market is going to move during the day is knowing what to do with your existing positions. For example, in our recent recommendation of HGSI, it traded down when the market was trading up early in the morning and came back down and almost used the T-line again as support. Now this would have been a little bit disconcerting for an investor that didn't have a good feel that the market was heading up to allow this one to get the profit taking out of the way and come back up before the end of the day. There's lots of hidden information and innuendos in candlestick analysis. Once you learn how to use them correctly, you drastically improve your rate of return in your portfolio. That'll be it. We'll see you in the chat rooms.